Hey guys, good afternoon, everybody. Today is Wednesday, May 22nd. It is 2:01 right now. Our scheduled mentoring session is for 2 o'clock. So I'm going to go ahead and finish setting up this room real quick, and we'll get started with our mentoring session shortly. So it's got a few things here to update. Let's go ahead. One last thing here. Let's go ahead. All right, solid. So let me get this link sent out to you guys here in the premium. Also send this out to email as well. All right, gonna send this out to a few more places, and we should be good to go. So good afternoon, everybody. Today is Wednesday, May 22nd. It is 2:03 right now. Our scheduled mentoring session is for 2 o'clock. So I know people are going to start trickling in as time passes. So if you guys have any specific questions that you guys want me to cover, any trading strategies, indicators, tools, etc., just pop into the chat and I'll answer whatever questions you guys have. We don't really have a schedule for today, so whatever questions come up, we will cover them here. So it looks like people are still making their way in. I'm trying to remember if I posted this everywhere that I needed to. But it looks like I did for the most part. So, all right, perfect. So I'll get a few moments for people to continue making their way in. Once you guys have questions, feel free to just pop into the chat. Whether you guys are here on the Zoom or whether you guys are on the YouTube, wherever you guys want to pop your questions in. Just feel free to chime in and I will answer the questions as they arrive. So I think so one of the main questions that I think some people were asking about was the momentum divergence. I know there's no video up for it yet. It's a pretty simple strategy, so the video is not super necessary, but the video will be up shortly. I just have to record it. It's just a process going through recording, but I'll show you guys some examples here that came up throughout the day. So it looks like people are still making their way in, but we'll start off with that first. So let me go over here and see if there was any entries that came up. So we got up a live session at 8 o'clock. Here, we'll just go down the list here. Or let's go from like current up until now. So it'll be easier to see if we can find anything here. I mean, this is too late in the session, so obviously this wouldn't count. Still work though, but that's too late in the session. So this is like towards the end of the session here. I think there was maybe one right here at the very end. All right, so let me just show you guys this real quick. So here's one example of a momentum divergence, if you guys are wondering how it's applied. So let me see if I have the criteria up here. Pretty sure I put the criteria up here the last time. So momentum divergence. I swear I made one here, but I don't remember what I named it as. Go scale, what's the current scale? It's fine. I'll just do another one. So I'll start a new one right here. I swear I made one, but it's okay. So this is the momentum divergence strategy. So first you want to confirm direction of momentum using momentum indicator. 2, confirm direction of trend using pivots. Oh, it's under divergence. Thanks, TJ. I knew it was under something. It's just called divergence, right? Because I remember I had it up. I just don't remember where I don't see it on here for some reason. I don't know. Maybe it'll just pop up and I know it's not any of these. Hmm. It's okay. It's not a big deal. I'll just retype it up here. And then in the future, if we find it, let's make some adjustments. Okay, so my momentum divergence strategy, confirm direction of momentum using momentum indicator, confirm direction of trend using the pivots. Here, 3, confirm initial divergence, direction of momentum, confirm tracement, divergence, divergence. Fifth, tracement, confirm equation, divergence, direction, momentum. Enter on the close of the units. Divergence candle. TP stop loss. 20. Or diff based on ATR. Okay, so I think we'll just use this here. I'm going to name this I'm just going to name it momentum divergence. Okay, so here goes an example of the momentum divergence strategy, guys. So if there's any questions that you guys have along the way, feel free to pop in. This is pretty much the main thing we've been looking at lately. So I think this is the most important thing to cover. This entry came up super late. It's not one that happened during the live session. This is one that came out, later on in the day. So let's start off with the first criteria. So the first criteria, and I'll just turn off the high-low indicator because it's not used for the strategy. So first criteria is confirm the direction of momentum using the momentum indicator. You guys can see right here, we have a sell momentum. Doesn't matter if it's valid, invalid, you're just looking for momentum there. So we have a sell momentum right here. That's step 1. Once you confirm that, you're going to be looking for sells here, of course. If we get a bullish momentum, then we'll look for buys. But right here, we have a sell momentum. So you would be looking for sells here. Once you pass step 1, you go over to step 2, confirm direction of trend using the pivots indicator. As you can see over here, we have a bearish momentum. So we're obviously looking for the pivots here to switch into a bearish trend, right? So initially, and let's go back to this first. You can see over here, the momentum came up and the trend was not bearish yet, right? So you can anticipate the entry coming later on in time. So we have a bearish momentum. You're not going to look for any momentum divergences here because the trend's not bearish yet. But if you wait long enough, you'll see here that the momentum starts to move downwards with regard to momentum and the trend follows it. So you can see over here that the trend finally starts moving in its direction. And at this point, you can now move on to step 2. So step 1, we have bearish momentum. Step 2, you confirm the direction of the trend using the pivots. If you guys are not familiar how to use the pivots to confirm the trend, you basically want to see all of the level 1, 2, and 3 pivots below level 4. Level 4 is going to be the red pivot, and you can see over here, everything's below the red pivot, vice versa. When everything is the opposite direction, so you can see over here, when everything is above the red pivot, this is in a bullish trend. So this is a bullish trend, but going back to our example over here, this is a bearish trend because all of the other pivots are below the level 4 pivot. So with that said, step 1's been met, step 2's been met. For step 3, you want to confirm the initial divergence in the direction of momentum. So we have a sell signal right here, and you can see that the divergence is bearish right here. You can tell it's bearish divergence when the red pivot is, or not the red pivot, when the red divergence is above the green, and then vice versa. You can look for the opposite when the green is above the red. So step 1, confirm direction of momentum using the momentum indicator. We have bearish momentum right here. Step 2, confirm direction of the trend using the pivots indicator. You can see the pivots here are shifting to bearish trend. Step 3, confirm the initial divergence in the direction of momentum. You can see over here, when this sell signal came up, we had divergence for a sell here, or bearish divergence. Step 4, we want to confirm the retracement divergence opposite direction of momentum. So you can see over here that the divergence was bearish, and over here, you can see that the divergence was now bullish, right? So bearish right here, bullish right here. So again, step 1, confirm momentum right here, confirm trend, bearish. Step 3, confirm initial divergence in direction of momentum. It's bearish right here. Step 4, confirm retracement divergence, opposite direction of momentum. This is the retracement that we were looking for. Step 5, confirm continuation divergence in the direction of momentum. So let me just make this a little bigger so you guys can see it a little more clear. You can see right here, once this candle closes, and this is typically what we're looking at during the live sessions, we're looking for the divergence to continue in the direction of momentum. So bearish divergence, bullish divergence, again right here, bearish divergence. So at the close of this candle, this is where you would be looking for entry. As soon as this candle here closes, you would enter this for a sell. You would enter for a 1020. The ATR right here was 16, so it's fine to do 20 because, you know, the ATR is not super high. This is just basic normal ATR. Once you have that set up, you would let the trade run. And you can see right there, you caught the momentum as it shot straight to full TP. So that's a simple explanation of momentum divergence. There goes one example right there. And let's see, so Vimal I have a suggestion regarding the divergence. It is sometimes difficult to understand if the cross has happened. I wonder if we could update the indicator to show an arrow when it crosses. This will make things clear. Well, that's the thing. You don't want to make things, if you can't see it, then you don't want to take the trade, Vimal. At that point, you're following or you're forcing a trade, right? You want it when it's clear. So if it's not clear, then just don't take the trade. If you have a cross there, there's going to be crosses all over the place and it's going to make it messy. So I thought about that, but it's just not, we're not looking for the crossover. We're looking for the confirmation for things to line up. So if like the momentum is heavy, then you'll have the direction of the, of the cross there. If it's not clear, then you just don't take the trade. So I've tried it with the crosses. It doesn't work well because the thing with this here is that they're not always going to be spread out. You want to take it when it's actually spread out. You don't want to take it when it's right next to each other. Because like, for example, over here, you'll have your little cross right here, right, Vimal? You'll take a trade and you'll lose a trade because it's not clear. So yeah, Vimal said I zoom in 20 times to check, but I wonder if I should do it or not. Well, if you're wondering, then don't take the trade, right? That's the whole point. That's what I'm trying to get across to you. If it's not a for sure setup, then don't take the trade. Only take the trade if it's a for sure setup because you don't want to take it when it's like going sideways. That's literally when you don't want to take it. Do you have an example, Vimal? Because I can just be straight up and show you exactly like when to take it or when not to, because you shouldn't have to zoom in 20x. Like you've never seen me zoom in 20x. Like you don't see me on the live session doing this, right, Vimal? Oh, please turn right here, right? Like I'm like begging for it to turn. I never do that. I wait for it to show where it's obvious and then I'll take the trade. But if you're like forcing it, like like you just said, there's no reason for you to zoom in 20x. Like there's literally no reason. Why would you do that? If you're doing that, you're just not confident about the position. The thing is with the strategy is that you're looking at a lot of different confluences here, right? That's why the strategy is so smooth and it moves in direction with like however the market's moving. So like for example, here you had the bearish momentum. You weren't you weren't necessarily looking for a sell right here at this time, right? You waited for it to swing down, and then you made it more obvious. But if you have an example, like show me, because I mean, if you zoomed in 20x, I'm pretty sure there's an entry that you can tell me. Like, give me a timestamp, let me pull it up for you, and I can show you. Like for example, here, I wouldn't be looking for any entries over here, right? Because why would I look for entries over here? Let me just replay it to this place over here. I just want to see the example because you're like making it seem like it's impossible. But if you're seeing something like this right here, you're not going to take the trade. Look at the ATR, it's at 11, right? Midday. 11 midday right here, you're not going to take the trade. So, I mean, at this point, like it shouldn't be difficult. I feel like you're making it more difficult than it really is. Like if it's not there, it's not there. You're not going to pull something out of the market that's nothing there for you to pull out, right? So for example, over here, you had a bearish momentum. You got the bearish trend over here. Like I mean, you could just answer the question yourself, Amal. Would you take the trade here? Like, would you be looking to squeeze any trade? And look at the ATR. ATR is 6, right? So you're not going to take the trade here. The ATR is so low. For one, the ATR is low. The divergence isn't even changing. The candles here are going sideways. Like, why would you take a trade at a point like this? Because this is basically the example that you're mentioning, right? Let's see. Vimal said just going side. Sorry, I don't understand what you mean. Just going side. Because I'm trying to help you. I'm trying to help you understand, like, because there shouldn't be a situation where you're not sure about the entry. Like, you should know if the entry is coming or not, right? So do you have like a specific? Yeah, exactly. Sideways example, like this right here, right? I mean, it'd be easier if you just gave me a timestamp. Do you have a timestamp? Because it seemed like you had like a specific entry in mind. You say you zoom in 20 times to check, but where's the timestamp? Because I can pull it up. I just want to show you the example so that you can understand. There's going to be obviously times here. Like, for example, over here. Okay, let me show you a good example, right? Or not necessarily a good example, but a decent example. Let me see. This was at around 9:30. Or this isn't really even a good example either. It's just another example here. So let's go up by one candle here. Because I'm trying to understand, like, where do you zoom in 20 times? Because it doesn't really happen very often. Like, I don't know when you'd have to actually zoom in, like you said. Like, I think you're over exaggerating it, and I can understand that. But I could never see anybody having to zoom in 20 times like this, right? It just doesn't make sense. Like, why would you even look for an entry like that? You're just forcing something. Um, so I mean, if you have one in mind, Vimal, I'd like to show you, but again, I feel like you're just overcomplicating it because realistically, if the entry is not there, you would just skip it. I'm trying to I'm like specifically looking for bad entries here to show you, but I just can't find one. So if you have a specific time that you were like looking at it, you're like, oh, I have to zoom in this close. That'd be helpful because I can just show you the specific one. Yeah, yeah, exactly. So Vimal said I'll check, but I'll check and tell, but I get your point. Yeah. Because you should never have to force a trade, right? Like for example, if you're looking for like I even say this during the live session, if you're looking for a breakout B3 or something like that, you're not going to take the entry if like it's going back and forth, right? Like you guys have seen sometimes where it's a doji candle. Like sometimes you'll be looking for that breakout B3 continuation, and the candle is just looking like a doji, right? You're getting like these flat candles here. And I warn you guys when that comes up, I'm like, if this comes up flat, then don't take the trade, right? You have to like make sure it's for sure going to be green or it's for sure going to be red. Because if you take it and the candle ends up closing as a doji, then there's just no entry there and you're just forcing it. So yeah, exactly. Vimal said I shouldn't be zooming in a lot. Like there's no reason for you to zoom in. You should be able to see the shift in momentum from bird's eye view, like from right here. If you're super zoomed out, you should still be able to see it crossing. Or if you're zoomed in, like to where price is currently at, you should be able to see it. But if you're going to have to force it, then that situation, I would just, like for example, right here, we have a buy signal, we have bullish momentum, we have bullish trend, we have the bullish divergence, bearish divergence, and then right here it shifts back up. I mean, technically this could be an entry here, but for me personally, I wouldn't have taken it because there's so many factors here, right? The ATR is at 7, that's 1. That already tells you price is going sideways. On top of that, the divergence here isn't super clear. So you just got to use your common sense for the most part. If you like, I mean, I know it sounds easier said than done, but realistically, it's like just use your common sense. If it doesn't look like a good entry, then just skip it. Like this right here looks like it's not going to be a good entry, but let's play through. And you can see eventually it plays through it. It works, but there's just so many red flags here. Price is at news price, ATR is low, divergence is like not very spread out. So in this situation, you would just skip the entry. And then you wait for a better entry because the entry is likely to come again later. Like you would have missed this one here and you would wait for the next one. Bearish momentum. Like this right here. Now this is where you'd be looking for a possible sell, right? Situation right here, bearish momentum. You have the bearish divergence. You got the shift right there. Again, right here, I wouldn't take any entries at this point because this is like going back to the example that Vimal just mentioned, right? You shouldn't be zooming in super far. If you zoom out, you'll see here that you can't really tell. You zoom in a little bit, you still can't really tell. You have to wait for it to really break out. In this situation here, you can see it never really breaks out because you're catching momentum. If there's no movement in the market and the ATR is too low, there's just nothing there. The thing is, I'm trying to simplify the strategy so that you guys can understand, but I think a lot of people are just missing the bigger picture, right? Everybody kind of wants those requirements. Like for example, the requirements here are pretty straightforward, but realistically, you know, trading is not always like that. You can't just like set the requirements and then just take it that way without actually looking at other things in the market. So yeah, like with these criteria here, you're supposed to just understand the requirements because that's kind of what you're looking for. But I mean, realistically, you should actually understand what the market's doing. Like these tools here help you understand and see, but you have to have some sort of skill with trading still, right? Like even though I give you guys all the tools here and give you all the requirements to follow, this is like just the first step. It's the first step to understand the entry, but you should understand the actual like what's the logic behind this, right? Why are these the requirements? So I'll go down the requirements again right here. So first requirement again, you want to confirm the direction of momentum, right? Why are we confirming the direction of momentum? We're confirming the direction of momentum so you know where to trade, right? Because obviously if there's no catalyst, like why would you take the trade? That's the logic behind it. It's not, oh, just look at momentum. You're looking at momentum because you want the price to be going that direction. So when you do take the sell, odds of you winning are likely. You know, same with the trend here. Why are we using the trend? We're using the trend because obviously we want to have better possibility of winning the trade. There's reasoning behind every step that I give you. The steps aren't just there for you guys to just look at and be like, oh, I'm not going to actually use my brain. I'm just going to look for this specific step and then I'm going to take the trade, right? It doesn't work like that. That's why sometimes if you guys are taking a trade and you're scared or you're nervous or you don't know what's going to happen next, that's because you don't know what's going on. You know, you can't trade like that. You have to, these requirements are teaching you to like understand what to look for. It's just the framework to help you understand. Like I'm basically dumbing it down because the thing is I don't need criteria. I can just look at the chart and like, okay, momentum's there, price swings down, retraces, comes back down further. That's kind of what I'm looking for. Like if I was to not give you any requirements, should I do that for? Okay, so if I wasn't to give you any requirements, like realistically, this is what I'm looking for. I'm looking for this pattern, right? It's a trend continuation pattern. But because a lot of people don't understand how to look for that stuff, I have to put requirements here to make it able for you guys to see. And this just goes back to what I was explaining to you earlier, Vimal. Like if the trade isn't obvious, then you just shouldn't take the trade, right? Because if price is going sideways like this, like for example, if I go back to the candles over here, like at this point right here, if I'm looking at this, I'm like, okay, this is probably not going to be the setup for me. Because I can see prices kind of like consolidating right here. But then, you know, you have other tools to look at the ATR to pretty much confirm, okay, price is going sideways. And then the divergence down here that makes it kind of slow. So I'm trying to get you guys to be able to think outside the box because although these requirements are like kind of what you're following, you still have to have some sort of understanding of like what you're looking for. Like my trading strategy is super simple, guys. I trend trade, right? That's literally all I do. All I do is trend trade. Like the same with this requirement here. I could literally just tell you, okay, I'm looking for this kind of pattern, right? But nobody will understand that. So that's why I have the requirements, look for momentum. But it's pretty much, it's like pretty obvious. I'm looking for a buy here because the trend's going up. Look for the trend, right? Like I'm breaking things down into like these little steps. Confirm momentum, confirm trend, confirm retracement. But realistically, if you understand how to read the charts, you don't even have to understand how to read the charts. You just have to understand how to look for certain patterns. And let me go to there's too much stuff on the chart. So let me just break it down again. I'm going to try to dumb it down enough so like you guys can kind of, so literally this is all I'm looking for. I'm looking for this pattern, right? That's when I'm looking for sells, that's the pattern I'm looking for. And then vice versa, when I'm looking for buys, that's the pattern I'm looking for as well, right? But then I create these tools here so that you guys can see things better. But for some people, it makes it a little more complicated, even though it's supposed to make things easier. Because if you were to take everything off here, you can still see the same thing. So let me just take everything off the chart. So let's turn everything off here. Right? Like you guys can see over here, this is what you're looking for. But a lot of people can't see that. So that's why I created the tools here. Like I created the pivots. So I'm like, okay, you can see the shift here now. The shift starts from down here and it continues up higher. That's pretty much what you're looking for with regard to the trend. On top of that, you add the momentum. You're like, okay, this makes more sense, right? You're like, oh, this is the bottom, price pushed up from here, and then it climbs up higher. So, yeah, just keep I mean, I try to make it as simple as possible, but I also don't want to confuse you guys because I mean, realistically, if you guys can understand that this is all you're looking for, like you're really just looking for a basic pattern here. You're looking for that, or you're looking for that. If you can just keep that in mind, that that's what you're looking for, and you're looking for momentum, I mean, not momentum, you're looking for like volatility, um, it'll make like you just want to try to keep things as simple as possible. Because the thing is, the market will do a couple different things. There's I'm trying to clean up the chart so you guys can see. So there's markets that go like this, obviously. There's markets that go like this, obviously. But this is where you have to be able to understand certain things is when price goes sideways. Because you can still trade within these types of markets. It's just you have to understand that when the market's going sideways like this, that's probably where you should avoid the trade. And that goes back to what I was saying with Vimal earlier. When the volatility is slow like this, don't force it. Just don't take the trade. So I know we kind of went off on a tangent there, but I just wanted to drill it in so that you guys understand that, like, you shouldn't always take every single entry. If you're forcing the trader, you have to zoom in super close to identify the entry, then odds are there's probably no entry there. And you'll see the time period where it moves slow like that. It's typically around like certain times during the day where the market's just slow and sideways. Because you can see the entry that I showed you guys over here happened like at like 10, 12, 11. This is like towards the end of the session versus right here between 8 and 9, where the market was kind of flat. Or even like lately, it's been kind of flat during, even live session times, just like how it was today. Because the market was pretty much flat from like 6, it pushed up right here, and then from 6:40 up until 8 o'clock. If I take this off here, let's turn off the pivots, turn off momentum. This is pretty much where price was kind of, going back and forth for today. And this is why we didn't really have any entries. This price just went back and forth like this. So let me scroll up real quick. So Brian's asking, is the momentum divergence indicator available yet? Yeah, it's been available. I mean, for the past month now, it's you go to your indicators, go to invite only. It's right there, Kodi Kai momentum divergence. So I put it up about a month ago. Let's see, Steve said, I believe today's 1 minute time frame at 13:13 TST is a good example. Also, if at time of candle close, ATR is at 20.56. Let's see, Sam. CT time. I'm trying to understand. Let me go to the time zone converter. So you said CST time. 13, 13, 11, 13. Okay, perfect. Let me pull that up. Let's turn on the tools over here real quick. Yeah, so this is this is actually a really good example. Thanks, Steve, for mentioning that. So yeah, like this is a perfect situation that Steve just mentioned. This is like a time where you would just not take anything, right? Or actually it started to spread here. So yeah, you wouldn't take it right here, but on that 13 candle, that's where it actually looks pretty nice, right? So we got the sell signal right here. The divergence was bearish. We had the retracement right here. And then it kind of went sideways for a little bit. But right here it was obvious that it would spread out, right? So in this situation right here, that's where you would take that. The problem with this here is that the ATR is kind of high. It's at 20. So I don't know if I'd use a 1020. It might use a 1025. But looking at this here, it's still played through. But yeah, that's a good example right there. So you can see how the market kind of went sideways for a bit, but if you waited long enough, the actual entry here at 113 or 1113, it actually spread out. Like you wouldn't enter on this candle, but you'd wait for the next one. And you can see right here, like there's no need to zoom in, right? Like there should never be a need to zoom in. You'll see me on the live session. I never zoom in to see it. If it's not obvious, then I'm not going to take it. But right here, it's pretty obvious. You don't really have to zoom in at all. And then once you have that setup right there goes your trade. So yeah, thanks Steve for the example right there. Yeah, no, definitely. Yeah, Steve said glad you agree because I took the trade. And the thing with this strategy, guys, is that you can apply this on different time frames, right? I've seen other people kind of ask, like, what can I use on a higher time frame? You can use this on higher time frames. If you want to trade on the 5 minute, same with that too. Like over here, same thing. Price kind of breaks. You would use a different TP stop loss, of course, and you probably wouldn't trade towards the end of the session, but it's pretty much the same thing. Like for example, right here. I'm not telling you guys to trade on the higher time frames. I'm just telling you guys it's possible for the people who want to trade on the higher time frames. The higher time frames are just, I don't want to be on the charts all day, so I'm not going to be trading on the higher time frames, but I'm just showing you guys here some examples that it is possible. So there's a sell signal right here, bearish trend, bearish divergence, bullish divergence for retracement. It breaks down again right here. The ATR at this time was like 8. This was pre-market. If you want to go for the same 1020 there, let the trade run. Full TP, right? If you want to do it on the 10 minute, same difference. Doesn't make a difference here. Same thing. So if you're on the 10 minute here, you see the same thing that you're looking for. I mean, again, this is towards the end of the session, so you wouldn't mess with it. But there's no examples there. You'll see more examples when the volatility is up. So on the 10 minute, obviously, you're not going to see it as much. And I don't think anybody trades on that high of a time frame anyways. You want to trade on the 1 hour, same thing here. Price pushes above, retrace. I mean, it's the same strategy. So this just goes out to the people who want to look for different or looking to trade outside the live session times. And the strategy works on different assets. It's not just for YM. Like if you wanted to apply this on something like gold, GC, you can do that as well. If you wanted to apply it on NQ, which is another popular one, same thing. I think a lot of people have been opting to trade on NQ lately because the volatility just kind of sucks for YM lately, but it's going to pick back up. The thing with NQ is that there's earnings coming out this week with NVIDIA and stuff. So that's why the change here is a little more prominent versus how it is with YM. But yeah, it doesn't really matter what time you want to trade on, what time frame you want to trade on, what assets you want to trade. These strategies kind of flow with pretty much everything, as long as there's volatility in the market. Martin's asking 7, you risk 20, 10 profit. Yes, that is correct. It's a 1 to 2. Strategy is a high win rate, so that's why we can risk negative. If you have a low win rate, then it's not going to work. But if you have a high win rate, like above an 80%, then it works, of course. And that's typically where our win rate sits, all year round. you're gonna go through like some phases where the market's kind of where it's not really, well, there's not too many. So let's just take a look real quick. So let's take a look at our official trades for the month so far. So we're currently at an 80% win rate. We're at 30-point profit for this month. This month hasn't been so good for a number of reasons, right? A number of reasons is that, I mean, the main thing is that the market's not really directional. All of our strategies are based off momentum and they're trend following strategies. So because there's no trend, it's been hard for us to get a lot of entries that we typically do. Like, comparing this May to last May, 2023. So in May of 2023, we had a 100% win rate. It was a bit of a slow market as well, but it was moving more direction. So you can see over here, we had a 100% win rate for May 2023. All the entries hit. This month is a little more trickier. Like we have like maybe a fraction of the number of entries here, and it's just a little more trickier. I think a lot of these losses here are based mainly on me because of the FOMO entries that we've been taking. And I just got to stick to the game plan. We talked about this during the live session. I just got to stick to my game plan. My game plan right now is momentum divergence, and that's what I have to stick to. Because everything else is kind of just noise to me, especially if I'm not looking for it specifically. So let me scroll up real quick and see if there's anything else that I'm missing. Let's see, Nick said, these are tools, you must learn how to use them, and then you'll eventually master them with enough use and time. Yeah, and I agree with you too, Nick. So the thing with these strategies and these tools, guys, is that I'm just setting the foundation for you guys, right? I'm setting the foundation to show you guys how these tools work. You don't necessarily have to use them the same way I do. Like, for example, I trade with a negative risk reward, right? That's just the way that it works for me. Doesn't mean it's going to work for everybody, but there's other people in the group who still trade this for a one-to-one based off ATR. So like, for example, let me see, I'm going to see if I can find something here, like another example of an entry. I mean, there just wasn't really many entries today, so there's not too much to look at. Let's see, 8 o'clock over here. Okay, so here's another example. I don't think it's going to be a good example because the ATR is so low. But there's some people in the group who trade, like they'll trade the same strategy, but they use a different TP stop loss. Like you don't have to use the same one I'm using. See, this isn't going to work because the ATR is at 7 right here. If the ATR was higher, say if it was like 25, 25, or if it was like 25 or 30, some people in the group would take this instead of a 1030 like I would, or 1020 actually. And again, the ATR is just too low. So you can't really make any change there. But if you wanted to, some people do double ATR, which would be 1414. And that's kind of like another way of doing it for certain people. There's a ton of different ways. If you have questions regarding that, I mean, I can show you different ways to do it. For me personally, I like to go based off my fixed TP stop loss because I don't have to adjust my contract size. But if you want to trade based off ATR, there's two different ways. Like you can trade off ATR times 1.5. That's usually what I do. So if I'm trading based off ATR, I'm going to do 7 times 1.5. So that'll give me 10.5, right? So in that situation, I would go, well, I still wouldn't use a 10-10. That's too tight. But in a situation like that, that would be the case if you want to go 1-to-1. If it's too small. If you want to go double ATR, that's typically what people do sometimes too. They use 7 times 2, then it'll be 1414. It'd pretty much be the same thing. It's just they're slightly changing it a little bit to provide some safety net to their actual entry here. So if they wanted to do that, they would do 1414. I mean, either way it works. There's so many different ways to identify what your TP stop loss should be. But for me personally, since I'm working pretty fast paced during the live sessions, I don't have time to make adjustments to my contract size. I just have to use a fixed contract size with a fixed TP stop loss. And that's typically how I trade. Let's see, Martin's asking, could you explain more about ATR? When is a good number? I mean, it depends on the market. So the market that we're currently in right now, so let me just put it up over here. So ATR ranges. very low market, under 9 ATR. Neutral, sideways market. We'll say between 9 and 12 ATR. I'll say 9 and 13 ATR, or 9 and 12 is okay. Normal market would be between, we'll say 13 and 16. 13 and 17 ATR. Let's see. Volatility will be like between 18 to like 22 ATR. Very high volatility. Cautionary market would be anything above 22. So this is just like how the market currently is. I only know this because I trade US 30 or I trade YM every day. So I know how it moves because I know what the ATR is sitting at like pretty much, all the time. This is basically the ATR ranges. Let me just save this too, so in case you guys want to see this in the future. So these are the current ATR ranges right now for YM. If the ATR is below 9, it's like it's a very slow consolidating market. So you can see over here, the ATR is currently at 7. So obviously the market's going sideways. And then when the market starts to pick up, see if it ever picks up here. It doesn't really pick up today. I think the only time it picked up was around when the FOMC minutes came out, like maybe around 11. So it picks up a little bit. So you can see over here, the ATR picks up to like 15, right? See how like the market kind of spreads out now and it's moving directional? Because that's why it's under a normal market. Like you don't even have to look at the candles. You can just look at the ATR. If the ATR picks up to like around 15, you can know that's a normal market. This situation, you're like, okay, price is going to move directional. But if the ATR dies back down, see, like, check this out right here. See how the ATR is 22 now? And you guys look at my numbers here, above average volatility, right? The volatility here is very high because it goes from like a slow market over here where the ATR was like under 9. Let me just circle it. Like it was slow up here. And then you can see it starts to pick up right here, goes into like a normal market a little bit. And then it goes sideways again. And then right here, you guys can see the big spikes, right? The big spikes in price. You don't even have to look at the chart. You just look at the ATR and you're like, yeah, ATR is 22. Like market's moving pretty crazy right now. I should probably just sit out of the market. So, I mean, your sweet spot to want to trade would be between normal market and neutral market. These are like your sweet spots. If it's too low, you're going to be holding on to that position for too long because there's going to be no movement. If it's too high, then you're kind of risking it because price can likely hit your stop loss before it hits your TP. That's when these whipsaws happen, right? Price will come down, whipsaw back up, whipsaw back down, whipsaw back up. And depending on where your TP stop loss is, it's easy to get stopped out in a situation like that. So you typically want to trade between neutral to normal market. Above average sometimes, depending on how the volatility is. If it's not super high, then and if it's consistent, then okay, great. But you don't want it where it's jumping around so much. You can see over here, the volatility is still very high. It's at like 19. And you can see it's kind of tricky here because you do want to take some trades in this situation, but the last thing you want to do is get caught when the market starts to flatten out. So you can see the ATR here is still pretty decent. Still pretty decent. And then you can see it starts to flatten out a little bit, picks back up. So you can see how crazy the market gets here. And you can just look at the ATR. See how the market moved here towards the end? Big whipsaw right here. The ATR was at like 22. See 24 ATR down there. When the ATR is super high like that, it kind of hints you like, okay, I should probably sit out of the market because I don't want to get whipsawed out. And then now it dies down. And then you can see over here towards the end, the market goes sideways. It is back to 8 ATR. So it's just a small tool to use. You don't, it's not like it's not the end all be all. Like you don't have to use the ATR, but you guys can see like the best time to trade is probably going to be between a neutral market and a normal market. Because in a situation like that, you can still take entries. It might take a while to hit your trade, but if you're trading within those two zones right there, it the odds of you getting spiked out are not as likely. So yeah, try to stay between the neutral and normal market. Above average is okay sometimes, but just make sure that it's actually going to be consistent and it's not, it's not just spiking to like 22 ATR and then coming back to 13 like a few seconds later. Yeah, no problem, Martin. So let's see if there's anything else here. Yeah, Steve said, I believe ATR 15 and above is good barometer for a trade. Volatility is needed for the setup. Yeah, and I agree with you too, 100%, Steve. That's why I was saying like, normal market's probably going to be best, but even a sideways market's okay as long as it doesn't go below 9. Once it goes to 9 or below, that situation is like, okay, we have to maybe look out for the market to get stagnant. Yeah, CJ said he was looking at the charts a couple hours after we got off the Zoom and the ATR was between 20 and 22. Yeah, the reason for the spike was because at 11 o'clock, that's when the FOMC minutes came out. And the FOMC minutes they weren't good. That's why the market came down right after. Basically, the meeting minutes showed that the Fed is they're not satisfactory with they're not satisfied, or they don't think that our current progress with inflation is satisfactory, because they're worried that if we don't get inflation under control, things are just going to get worse and worse, and that's kind of what's happening here. So the thing with that means, if the inflation doesn't get, if we don't act quickly with inflation, then there's just going to be more regulation and stuff like that in the market, which is going to affect, obviously, the whole economy in general. So that's why you saw the drop right here. And then you see the range. So price dropped right here after the news came out at 11. And then now it's just ranging from there. So the thing with the market tomorrow that you want to be careful for is, or not even tomorrow, you can look for it during London session, is price going to continue dropping or is it going to correct back up? My guess is that it's going to correct back up. I don't think it's going to keep dropping. I think price will probably consolidate here for a bit. And then maybe by London session or the end of London session, price will climb back up. Let's see, the 11 o'clock candle was right here. So I could expect a possible correction. So it'll probably range for a bit. And then by London session, it'll correct back above this area here. And that's just my opinion. And it's just because that's what I see happening. I don't see the economy crashing right now. It's just people are scared. So that's why they sold off right here. But I do see a correction probably by tomorrow. Let's see. Steve said, Sean, I believe you mentioned during today's live session another possible strategy using divergence. Can you elaborate? Yeah, for sure. Mal said we haven't looked at a CV for a while. I mean, we've looked for a CV, but it hasn't came up. So I've been mentioning the CV pretty much every day, but there just hasn't been any CV entries. So it's not necessarily that we're not looking for it, it's just that they're not there. So let's see. I mean, let me see if I can find one for you here. I mean, there just isn't any here. You can just point it, like you can eyeball the chart here, and you'll see that there's just no entries here for a CV. The trend here was bullish, so we'll obviously be looking for some buys. There's no CVs along this entire area here. So going down here, there's one CV right here. This happened after the live session. This was at 10:50, and this was a CV entry right here. So it came up, and I think this one here played through. Like I would like to take CV entries because they work well in these types of markets. There's just not enough volatility. There goes one CV entry right there. And I'll go over the strategy shortly, Steve. I just want to cover everything that we have on the plate right now before we go into something new. 1027. I don't see anything over here at 10:27 from all. Is it 10:27 my time? I mean, this wouldn't be a CB because the trend here is bearish. And over here at 10:25, there's still no trend here. So, I mean, you wouldn't take any CBs around this area. So this wouldn't be the trend here already shifted with the red pivot. Yeah. That's what I'm saying. Like there's just no CVs. I mean, I would take a CV if they came up. Like if a CV lined up with the V1 variation, those are still good because they move during they're good during sideways markets. But there just isn't I just haven't seen any for myself personally. Yeah, and the market just isn't trending, so it's like really hard to find those types of entries. See if there's any. I don't think there was any from today. So I'm still looking for them. I just don't see them. Yeah, this is from live session today up until 8 o'clock. I didn't see any CVs here. Yeah, nothing. So nothing from 6:30 up until 8 o'clock. But yeah, I mean, if you see them, you can call them out. I probably won't take it, but you can still call them out. They just haven't really came up. Let's see. Moss at 7:37 over here. Let's go back over here. 7:37. Let's see. Yeah, so there's a CD right there at 7:37. I wasn't really looking for it here though. Yeah, so there's a CV right there. I think for the CV, didn't we mention that it would have to have a certain ATR? I don't remember because I haven't really looked at it, but a lot of the entries won't work here. That's why I'm looking mainly for momentum divergence because there just isn't enough volatility for these entries here to come up. Um, I'm trying to think if there was a criteria. I know there's a criteria for the breakout V3 continuation. We mentioned that we would only take that if it's at above 15 ATR. That's why I haven't been taking any of those entries. So I haven't been looking at any V1 variations. I haven't looked at any breakout V3 continuations. I mean, even the high-low scalps. I think for like basically any strategy other than the momentum divergence, um, there just isn't really enough volatility for those types of entries, right? Because there's no movement here. Let me see if there's anything around here. So the thing with this over here, I don't remember where opening price was and stuff. And I know there was like some news up here. Oh, I can't remember. I remember there was news up here though. I deleted everything once we got on this mentoring session. So I think there was stuff up here if you guys remember, because there was no entries for us to take up here. Because I remember there was like a couple red flags. There was like news price somewhere down the middle and somewhere else. There was news at 7. Yeah, there was news at 7 o'clock. And there was another news event, I think, at 4 o'clock. And another one at 7:30. Actually, so the yeah, there was news at 7:30. That's what we forgot. Yeah, so I think your entry over here, this would have aligned with the news price right there, boom all. So that's where it would have been kind of a red flag. I just remember there was like 2 news events right here. Anyways, well, back to what we were talking about with the CB entry. I just haven't seen any come up. And there's no direction for those. Like when you trade the CB entries or V1 variations, you want to confirm there's like a very strong direction, like with regard to trend and with regard to momentum. CJ said with the CB, you said adjust TP stop loss, but ATR didn't go below 10 at that time. I'm not sure if it's the same rules apply with single digit ATR we've been having lately. Yeah, that's the biggest thing. So I think the biggest problem is the ATR is just so low And like you can't really catch reversals, right? So the thing with the CV and the V1 variation, and for any of those reversal patterns, those are reversal patterns because you want to catch like a strong reversal from wherever price bounces from. But because the ATR is so low, you can't really catch those movements, right? Even the high-low scalps, like you'll see a high-low scalp like this over here, and it's not really a smooth push up, right? Like there's a high-low scalp that happened right there. And you can see eventually it does hit, but this thing takes forever. So that's why, like, that's the main. So a lot of people have been asking, like, why haven't I been looking for the other entries? It's mainly because of the ATR. All of our strategies are based off momentum and volatility. The only strategy that's kind of that could work in a market like this, for me personally, from my experience, is the momentum divergence, because that's kind of what we've been applying for the past couple of days, and that's our past couple of weeks. And you can see it works for a specific reason because you guys can see how the volatility kind of picks up and then it dies down. But you're catching it at the initiation of the momentum, because you can basically catch the momentum when it starts to swing back up. It's just you have to find the actual entry. Because I think this is where that entry came up earlier too, right? This is the one that we were kind of following pretty much all session. So I was looking for that momentum divergence here. And you guys can see that even though the volatility is low here, this was the move that we were looking for. So we were kind of waiting for this here. I didn't take it because the trend here started to shift to bearish. I didn't want to risk it. But this was the setup that we were looking for. So you can see here that the ATR is still at 9. But look what happens when you catch the divergence. So you guys can see down here, the divergence is shifting. Even though the ATR is low, this is an initiation of a possible breakout to happen. So that said, you enter this here, or this is where we would have entered it for a 1020. And you can see that even though there's no volatility that's been established, there's still a push there. And you can see it pushed right to TP. So unfortunately, we didn't take this trade because the trend here was shifting, but you guys can see how the momentum divergence strategy still works well, even though the ATR is low. And that's the main reason why it's the main strategy that I've been kind of focused on and looking at, because you don't really need the ATR to signify your entry, because you already know if this starts to spread out and it moves into correction, the odds of it pushing up from there are very likely. So yeah, there goes that there. I wish I could explain CV a little more for you guys, but it's just not the type of market for a CV. Like the CV strategy is meant for a sideways market, right? A ranging market. This here isn't really a ranging or directional market. If you guys have seen my markups here, I think my markups are still up. So this is the market from today, from 6:30 to 8. See, this isn't really a smooth market. It does range for a little bit, but for the most part, it gets stuck in these consolidation zones. So instead of a big range, it's really just consolidation. Breaks out, consolidation. Little breakout, consolidation. And here it looks like it's a nice big range, but it really isn't because the ATR is so low. It was like an 8 ATR pretty much the entire day. So if you guys have any more questions regarding that, feel free to let me know. Otherwise, I'm going to give you guys a little sneak peek to, let me answer one more question. So iPhone over here is asking another question. iPhone's asking, just wondering, have you ever messed with Heikin-Ashi candles with your strats? Just seeing about holding them longer. So the thing with Heikin-Ashi is that it's basically like a momentum indicator, right? So I've used it before, but the problem with the Heikin-Ashi is that it looks good when you're like replaying it, but when you're actually looking at it live, and I only know this because I've looked at it live, it's not as smooth as it looks. So like if you turn this on, like let me turn it on here. So if I change my indicators back to Heikin-Ashi, yeah, there's no replay mode for it. I have to get out of this. Like what I would recommend is if you want to use it, practice with it live, because it looks good here. Like, if you're looking at it from this perspective and you're like, oh, like it looks so good that you can just take the red candles and let them come down. The problem with this is if you're looking at it real time, the candles aren't exactly that smooth. Like for example, here, you see how it looks like price is coming down, and it's like, oh, this is pretty obvious to take a sell here. It's not going to be the case because when you're looking at it real time, these things are shifting back to green, shifting back to red, shifting back to green, shifting back to red, etc. And if you're looking at it during a like a volatile market, like during the New York session, this isn't as smooth as it looks. Like it looks super smooth here because it's already happened. But if you look at it live, it's not as smooth. And I only know that because I've tested it myself. Like trust me, I try to come up with a good amount of strategies using the hike and the sheet. But the other problem with the hike and the sheet is that it's not based off time. So it's based off like movement. If you guys look over here, like typically if you're looking at this from regular candles, you'll see that everything's here from, by the minute. But if you go to the hike on a sheet, it's not really based off the minute. The candles kind of they skip sometimes. Like if there's no volatility, it'll just skip a minute or a couple of minutes. Like you can't really see here on the 1 minute as much, but if you go on the 5 minute, you'll see here that the times aren't always going to be exact because it's based off the movement of the candle, not necessarily the time. So, I mean, if you want to play with it, I played with it before. I just didn't find it to be very useful to me. I felt like it was more confusing than helpful. And trust me, I'm always looking for different ways to trade the hike on a sheet. I see a lot of people on YouTube try to teach hike on a sheet, or they like to show the way they trade off the hike on the sheet, but it's always like a replay. You don't really see someone trading hike on the sheet live very often. So yeah, if you guys want to try out the hike and the sheet candles, they look good after it's happened. But if you're looking at it real, like for example, here I just showed you guys again that we were talking about, this looked like it was going to come down, right? Like before these candles started moving, it looked like they're all going to be red candles. And then now you can see that they're not really as smooth as they seem. So you got our green candle right there. These are red. This is green. This can easily just shift down at the last second back to being red. And then it'll look nice after it's moved. But yeah, I mean, you can use the tools though. The tools do work well with it. It's just from my perspective, I don't really have a strategy that I can. Yeah, exactly. Patricia said, plus you can't measure the candles. I think that's the biggest problem. It's because you don't know when these candles are going to close. Like they look good because if they were based off time, but because they're based off movement, not specific time, um, you don't know if every candle, like you can't be like, oh, if every candle closes like 3 green candles, right, you'll be ready to take entry. The problem with that is like the candle might close, it might be green it for the moment, and then a minute might pass, and then that candle will close in a different color. So yeah, you know what I'm talking about, Patricia. I think that's the biggest problem. If there was a way to set up hike on a sheet where it was time-based, I think it'd be a lot more useful. But because it's not time-based and it's based off movement of candle, it makes things a lot more complicated. So I mean, that's all I got to say with the hike on the sheet. I'm not saying it's a bad indicator. I think it's just you have to figure out your edge using the hike on the sheet. All right, so let's see. Let me take a little break, drink some water. Let's see. Okay, so let's go over the other strategy real quick. I don't want to go too far long. So, Steve, I believe you're still here, right? Let's go over that strategy that I was just going to show you guys. I'm going to clean up the clean chart here. So this strategy is based off the whole numbers. If you guys want to have the whole numbers marked up on your chart like this, just go to your levels indicator, type in 100 right here, and then it'll go to the whole numbers, basically the 1,000 or the 100 numbers. So if you wanted at 1,000, you can put 1,000, but you just put it at 100 and it'll give you the whole numbers. With this right here, we go to 630. So the way that that I use the strategy is using momentum. Okay. So using the momentum and the divergence. Let me just change this a little bit. I just don't like it super dark. Okay, so here's the way that the strategy would work. Basically, you're looking for price to break and close past the whole number. Now, let me just go over here real quick and show you replay. Okay, so looking at this right here, this is the first pattern that you're looking for. So you're looking for a break and close past structure like this. And then the pattern that you're looking for is you're looking for price to push up. And then you want it to align with divergence. So price breaks above it. You want to have a bullish divergence right here. Right? That's basically the first step of it. And you want to look at momentum. So you have momentum over here for a buy. It's basically looking for a momentum divergence, but using the whole number as your catalyst instead of momentum. The momentum is now going to be your confluence instead of your initial catalyst. The catalyst is price breaking, closing past structure. So for example, right here, price breaks past the structure. You're looking for the divergence here to be bullish, and then you're looking for the retracement. So you can see over here, the divergence has now retraced. And what you're looking for next is you're looking for price to come back up and break back above with divergence bullish. That's not the case here. We have a bearish divergence now. So now that we have the bearish divergence, you can, so it changes really fast. Like what you have to look for here is, so you're initially looking for the buy here, right? The buy here didn't play out because now we have a sell momentum. Now it kind of flips. So instead of you looking for the buy here, you're now looking for the sell because you're looking for price to swing back in correction after it faked out outside the whole number. So basically what you're looking for is you're looking for price to break and close past structure. Once it breaks and closes past structure, you're looking for two different scenarios. You're looking for one scenario where price breaks above and retraces and continues up higher. That's going to be the continuation, right? That's one scenario. The other scenario is that you're looking for the fake out. So you're looking for price to come up here, fake out, and continue down lower, right? So that's basically what you'd be looking for. You're only looking for two different directions here. And then once you have this here, you're now looking for a sell, but you're looking for the same pattern. You have this sell momentum. You have the bearish divergence. You're now looking for price to do something like this. Retrace, come back up, come back down. And that's where you're going to take your entry. So let's look for the retracement. All right, price retraces back up. Here becomes a problem again. We have now a buy signal. So now you're looking for a buy again. Looking for price to push back up. Never pushes back up right there. And then this is where it becomes a little more complicated. So I think for this specific strategy, this would have to be taught, like only people who know how to read the candles and understand what I'm trying to explain would be able to catch on to this, because the problem with this here is that it switches so often, and you have to be able to follow the chart and understand the price action to take the entry. So for example, here we were looking for the buy initially, then we were looking for the sell, then we were looking for the buy again, but price never broke past the structure. So technically you're still looking for the sell if you get another sell signal. So now you have a sell signal right here. And this is, so it's kind of hard to like explain this to a beginner, because this is the thing that I was mentioning earlier. So when you're breaking, closing past this catalyst, again, the same setup that let me just move this up a little bit. The same thing that I explained to you guys earlier, it still stands. So when price broke structure right here, you were looking for a couple confirmations. You were looking for a confirmation for correction, or you were looking for a confirmation for a fake out, right? So this analysis never went away. You were still looking for it. You were just waiting for the confirmation. The confirmation is here now, because you can see the continuation didn't happen, right? So the continuation didn't happen, and now you have the confirmation of direction this way. So once you have that confirmation, this is where I would take the entry for a sell, and I would do it for a 50-50. just because of how price is moving, I'd rather be safer. And that's how I take the trade. I mean, the market's so slow that this thing would probably go on for a long time. So I don't think this is the specific day that I would apply it. But eventually, let's see if it actually plays through. I mean, it takes forever, but it does finally play through right here. Does that make sense, Steve? I know this will probably make sense to some people, but not everyone. Like you're using the whole number as a catalyst and you're looking for the confirmation here. The problem with this here is that the market's so slow that you won't find these types of entries come up very often. But let me show you guys another example. So there's one example right there. Let me see if there was another one today. I don't think there was, because of volatility. Okay, so here's another one, right? So we have a sell signal, price breaks below. This is the catalyst again. This is the catalyst. Price doesn't come back down, so now you're looking for a possible buy here. So you have the retracement right there, right? Okay, here we go. You have the retracement right there. Same setup. This is your catalyst right here. When this happens right here, you're looking for either a reversal, right? Or you're looking for a continuation. The continuation never comes back down. So in this situation right here, price pushes back up, you have a buy signal, the divergence is bullish, you have the retracement right here, and then right here's another green candle, right? And you have the divergence right there below. So now that you have that, same thing right here, you take this for a buy, again, a 50-50 type move. And you just want to make sure your TP, because basically what you're doing is you're looking to trade within the range, right? You're trading within the whole numbers. So you're trading within the 4,000 and the 3,900 here, 39,900. And then again, right here is the entry for the buy. And you guys see it eventually hits. You guys see how, like, this is a really good strategy. It's just, this is hard to teach to a normal person. Like I can't teach this to a basic trader who like, doesn't understand price action. I mean, the price action is not very difficult to follow. It's just there's so many there's so many little things that you have to understand. Because I already know we're gonna get like a million questions, right? If I was to teach this to like the main group, we would get like a million questions here because they're like, oh, well, what happens if this or this or this or that? And I'm like, it's not that difficult. I mean, it's not that complicated, but people don't understand how to read this here, where it's going to be it's going to be complicated to someone who's not used to seeing these types of patterns, because you're just using this catalyst to determine, okay, is price going to pull back into the range or is it going to continue up higher? And then vice versa here, price breaks below the full number. Is price going to stay below here or is it going to correct back into the range? Yeah, exactly. So Steve said, yeah, it makes sense to me. It's like confirmation of continuation or back into the range. Exactly. That's literally what you're looking for here. So you can see here that the strategy works well. The only problem with the strategy that I don't like is that you'd have to be on the chart like all day. You can see how these entries over here come up. Like you'd have to be sitting at the chart for like an hour, and I don't want to do that. So like if you guys see what I'm doing here and you guys like it, you guys can do it yourself, but I'm probably not going to do it because it's just I don't have the patience to sit for this to like hit. Even though it does hit, I just don't have the patience to wait for these types of entries, at least not anymore. Okay, so another one right here, same situation. Let's see if there's another opportunity here. So sell signal right there, price breaks past it. So this is where it becomes a little tricky because because the divergence here isn't clear. So I wouldn't even mess with it. It'd have to be like super clear for me to want to take this. So that's all that came up for today. Let's see if there was more yesterday, which I'm pretty sure there was. So, you know, maybe in the future, and I've been saying this for a while now, maybe in the future I will create some sort of masterclass to mentor like people who can actually see this stuff. Because this stuff is not for beginners, of course. I mean, it can be for beginners, but you guys can only imagine how much work that's going to be on my end to teach a beginner how to read charts like this. This comes with time, comes with a lot of practice and a lot of time. And then for me, I just don't really want to teach anymore. I'm okay with teaching from time to time, but I don't want to teach. Like teaching isn't the main thing that I want to do. Like the hedge fund is like the main goal for me moving forward because I can make so much more money doing like literally no more work because I'm already trading anyways. So the hedge fund is just I'm going to be multiplying my profitability through, investors. So let me look for another example here. Okay, so price breaks past it right here. We have buy signal. Price breaks past it. You're looking for the retracement. Retracement happens right there. It actually doesn't continue. Price pulls back into the range. Price pulls back up. Again, right here, I don't think this is one that I would necessarily, yeah, the divergence there isn't strong enough. Okay, so price crosses back up right here. Divergence there hasn't crossed above though. Okay, this right here is the setup that I was looking for. Oh yeah, no, definitely, Steve. I know who you are, Steve. Yeah, I know who you are because I've seen your profits. You know what you're doing. So again, right here is another setup, Steve, that we were just talking about. So the catalyst happened like way over here. It pushed up, didn't come back up, came back up right here, but didn't actually have the divergence. So it comes back down right here. And then now you're able to see that price is likely to come back lower. So in a situation like this, I would set up for a sell. Of course, 50-50. Let the trade run. So you guys can see it works well. You just got to be on the chart like all day. Right there, Steve. So you guys can see it's a very powerful strategy. I'm always like, just because we're not taking trades on the live doesn't mean I'm not doing work behind the scenes. Like I've been trading for so long that I can just see these patterns in the market, especially off these whole numbers. So another one right there. And you can see these are for 50-50. I mean, technically, if I wanted to wait and just like find the entry and then let it run all day, I could technically do that. But again, I'm not the type of person that wants to be on the chart all day. I want to make my profit and then just be done. So see if we have one more example here before I wrap up this strategy. But yeah, eventually I'll create a group where we can like kind of cover this stuff with like more experienced traders. It's just yeah, exactly. Steve said looks good, might be a little tough on the charts all day with my ADHD. Yeah, same here. It's a good strategy for someone who can stare at the charts all day. For me, I can't stare at the charts all day like that. I've done that before, and it's not good for your health. It's really not good. So the thing with the strategy, though, that my cutoff is around 12:30, guys. So I know there's another opportunity here that might have come up, but my cutoff is 12:30, 12 to 12:30. Reason for that is because the volatility dies down towards the end, and you don't want to be holding on to this position into Asia session, of course. Because at this part it cuts off, and you can see this is where you would get stuck in the position because now it just goes sideways. But I mean, it's a pretty straightforward strategy if anybody wants to actually look at it. I think it's pretty self-explanatory. You guys can pretty much pull it off. It's just going to come with a lot of practice. So I can see it pretty quickly. If I ever see it during the live session, I'll mention it. I might even create a separate chart where we can just look at that because I think it is a good confluence if it happens during live session time. So maybe I'll create another chart here. That's just like a blank chart. And then I'll have the whole number so that we can use that as a confluence. I think that'd be a good idea, huh? Because if it comes up during the live session, maybe I can have another account where it just runs those specific trades. Because the trade hits, it's just a matter of catching it. Yeah, no, definitely. Brock said it looks promising. Never thought about that one. Great idea. Yeah, definitely. So let me see. I mean, if anything, I can probably get rid of one of these charts, maybe the PRV or the BV3, because we don't really apply them as much. Or I can just create a copy of this. So I'll make a copy of this. It'll just be clean V2. and I'll put it at the end. So I'll just do it like that. And then we'll just mark it up tomorrow. So we'll use it as a confluence. All right, we have one more question here. Let me scroll up real quick. If you guys have any more questions, feel free to put them in the chat. Brian's asking, hey, Sean, I remember there's a strategy, not sure of the name, used to trade where the candle wick rejects off the K2 pivot, any pivot. I remember you mentioned use the strategy when you were looking at charts all day. I know if you know the strategy. So it could be a lot of different strategies, actually. So yeah, iPad mentioned that it's a pivot scalp. That's like one of them. It doesn't necessarily have to reject off the pivots, but let me show you an example of it. So the pivot scalp is, I guess, yeah, it could be the pivot scalp. But the thing with the pivot scalp is that it didn't really require a rejection, because you could be talking about the snipe strategy. That's another one. That one actually had a rejection off the pivot. But if you're looking at the pivot scalp, this is an example of the pivot scalp. So to make things simple, you're looking for the trend. And if you want to look at that video, you can probably pull it up. It's going to have, the criteria for the pivot scalp. Let's see if I have it here. Yeah, so you're just looking for overall direction. You can see here that this is probably going to be bearish. You can see prices below the pivots. The pivots are angling down. This is going to confirm a bearish trend. So once you confirm that right there, next you're just looking for a sell signal. So the pattern that you're looking for is the same one that I was showing you guys earlier. You're looking for price to push down, retrace up, and come back down, right? That's the type of pattern that you're looking for. So right here, price comes down, comes back up, and then you get a sell signal right here. There's no need for a specific rejection off the pivot. So, I mean, you don't have to have a rejection. Rejection does help. If you see the rejection there, it'll typically work very well. And once you have that set up, obviously it plays through. So that's an example of the pivot scalp. The snipe strategy is very similar, but you're looking for an actual rejection. So, I mean, it kind of depends on which one you're asking about. Like, and also it depends if the rejection was an actual requirement or if it was something that you kind of just tossed in there. Because there's a lot of different strategies that do require the rejection, but the only one that I know, well, at least that I can remember, would be the snipe strategy. If I could even find it. There we go. Yeah, so this one right here, you're looking for the actual wick rejection. So you're looking for the same thing, but you're looking for the wick rejection. So you're looking for the overall bias. Again, right here it's bearish. You're confirming a wick off any K2 pivot and also a wick off the SR zone. So I'm not sure if this is the strategy that you're referring to, but this is another, I mean, it's basically the same thing. The only problem with this is that the ATR is super low. So this is probably one of those strategies that you would, and here, let me show you an example over here. So let's replay to this here. Actually, we'll replay to this right here. Okay, so this is a better example right here. We have the zone drawn up already, so I'll just turn this off. So for this strategy here, you're looking for the same thing. You're looking, but there's different criteria here. You're not taking entry off the momentum. You're taking entry off the rejection. So for example, here you have a buy signal, you have a bullish trend. You can see price swings above right here. You're looking for a wick rejection off the pivot and the SR zone. So this red candle right here rejects off the pivot and the SR zone. And once you have that there, you want to make sure that the wick is not touching, or the pivot isn't touching the body, which it isn't right here. And then you'd enter the trade right there for a 1030. If you're trading on the 1 minute, it's 1030. If you're trading on the 10 minute, it's going to be 50-50. So same situation here, price pushes up, it's TP. So it kind of just depends on what you're asking for, Brian. If you're looking for the one that has the rejection off the pivot, it would be the snipe strategy. If you're looking for the one where it's based off momentum, you would take it off momentum. Yeah, it's probably the snipe strategy. This is one that we applied like a long time ago. It still works very good, but I mean, it's still a good strategy. It kind of reminds me of like stuff we're currently doing now. We just don't use it as often. Yeah, exactly. CJ said we had a similar strategy. We applied on the 3 minute as well. Yeah. So the snipe strategy, you can use it on pretty much any time frame. You can use it on the 1 minute, you can use it on 5 minute. We initially created it on the 10 because it was during summer when the market was slow. But again, I mean, it just depends on you. You know, if you want to trade on the 10 minute, feel free. It still works. It works good either way, whether you're trading on the 5, 10, whatever it may be. It's just the 10 minutes easier to identify the zones, because if you try on the SR zones, the zones are more established on the 10 minutes. So for example, over here, you can see there's a zone right here. It's a zone at. So the zone's right here. And they're more established. So for example, here we have a bearish trend. You got a sell signal. You got this candle right here rejecting off the pivot and also off the structure. So you take that for a sell right there for a 50-50. I mean, I probably wouldn't take a 50-50 here because volatility is so low. I go for a 25-25. I mean, I guess if you went for 50-50, it still would hit, but again, it's up to preference. The ETR is just so low that I would actually go for a smaller TP. But yeah, there goes another example of the snipe strategy. Now that we've kind of looked at it, I'm kind of curious if it's been working good now because of the slow market conditions. So maybe something to look into if you guys are looking for, you know, one of the more original strategies to apply. All right, guys. So I think that's it for today. If you guys have any more questions, you know, feel free to hop into the chat. It's 3:30 right now. We've been on this mentoring session for about an hour and a half. I'm okay with staying on longer, but I don't see any other questions. So if there's no questions, we'll probably wrap this up. All right, Lamal, what's the question? Yeah, CJ said in C-Soup would make entries based off the price bouncing off the pivots. Not sure if he still does. Yeah, like what you could do sometimes, and this is like what certain people in the group do, is they'll mark up the entry. And then when they mark up the entry, they'll just catch every bounce off of the pivot. So like, for example, if they're taking, say a momentum scalp like this right here, right? Or a pivot scalp. Say they're taking a pivot scalp like this right here, and say this is their setup, right? What they would do, and this is more of an advanced way of trading. This is a way that a lot of other people would trade, is that they would look for the bounce. So you see the bounce off the pivot right there. Instead of getting into the actual position, they would just take a sell from right there, like a quick sell scalp. Price comes down, comes back up. They see another rejection right there. And again, you know, this is a more advanced way of trading. If you just keep stacking on positions there, price comes down, hit your TP on both of those. Price comes down and it hits the actual position right here. So you can scalp within the actual move of the higher time frame position there. So I mean, there's so many different ways to trade, guys. Like I can go on forever explaining so many different ways to enter trades. Like we have like about 20 strategies available. And if you wanted me to go into a deep dive into each strategy, like different ways to set up your TP stop loss, different ways to identify entries, different ways for late entries, different ways for different confirmations, like I can go so deep into these strategies that, I mean, there'd be like another 20, 40 variations to, you know, the specific strategy that you would that you would like to apply. Let's see, question from Vimal. So Vimal's asking, the question is around the strategy for passing the evaluation accounts. We've been on break even for the past 2-3 weeks. Wonder what is your mind? I mean, nothing changes with Vimal. Like really nothing changes. I mean, that's what makes you a consistent trader, right? If you're thinking about what needs to be changed, then that's where you're going to start blowing accounts, right? So, I mean, I've been doing this for how many years now, and what I've learned over the years is consistency. It doesn't matter if the market's not giving you what you're looking for. You stick to whatever your trading plan is, right? If you're questioning your trading plan, then I can almost guarantee as soon as you change something about it, you're going to blow your accounts. So that's my opinion. I've been trading for a long time, so I already know that nothing phases me. There's nothing on my mind. If there was something on my mind, I would have changed, the way I traded already. We've been trading the same way for years. And I understand that the market's not always going to give you what you're looking for. So to keep things straight and simple, there's nothing that's on my mind to pass. It's the same thing. We're gonna have a win streak eventually. We had a win streak right before this break even month for the most part. Back to like the previous month, we had how many wins? It's just like if you're looking for a solution to like if you're getting to the point where you're like losing a lot, then okay, make changes. But if it's a break even week or a break even month, that's not ground to change your trading plan, right? We're not losing. I'm not in the negative. So that's why I'm not really too worried about it. If I was losing, like, so for example, we were taking the breakout V3s earlier, right? And I guess we might have just panicked a little too early because we were losing some trades here for the BB3. But if you look at the data for the BB3 for that month of April, so we had a couple losses right here, right, for the BB3. If we kept taking the same BB3 for the rest of the month, we'd still be at like barely -50. This was a one-to-one strategy. So like if this goes back to what you were just asking, like what am I thinking? I'm not thinking anything, because if you change your plan right away, like for example, we stopped taking the BB3 here, and as soon as we stopped taking the BB3, it went on another win streak. So I don't have any plans of changing my trading plan. If I start losing a lot, then and I'm starting to be in the negative, then okay, I'll start changing things that need to be applied. But I mean, you have to just understand you're not going to be on a 17 win streak for like 12 months back to back to back. Well, you got to be realistic, bro. If that was how every strategy was, then you'd be a billionaire by now, right? I'd be a billionaire by now. But the thing is, you have to understand that the market's not always going to be moving in the direction that you want it to. I would prefer to have a break-even month than to have, a losing month. As long as I'm closing the month out in profit, even if it's a little bit of profit, I'm cool with that, because majority of people are blowing accounts. And the reason why a lot of people blow accounts is because they keep changing their strategy, right? So I'm going to stick to what I'm doing. There's nothing really in my mind. Like there's no thought behind my mind to go and change the strategy, because I would prefer to have a break even or even like a small red month versus having some changes and then I end up having an overall red month. Because I don't think I've had a red month I can't remember the last time I had a red month. I've been we've pretty much been in profit, or we've been in like, here, let's go to 2023. 2023 was actually a really good year for us. Yeah, I can't remember the last time I had a red month. And you guys can see the win rate over here for these scalp strategies for like the previous year, 2023, 2022. This is why I'm not changing anything, because I know that sometimes the market's going to be a little slow, but it's never going to be to the point where there's not going to be any entries, or whether I'm going to be just flat for a period of time. So I mean, you can even see over here during the summer, like even during July, market was still kind of slow, but we still took like 30 wins or losses, 88%, 88.2% win rate. So yeah, I mean, short answer to your question, Jamal, is like nothing is really going to change in my trading plan. If anything does change, you guys will know, because things are going to change. The strategies I'm applying and stuff like that. But for the most part, I'm going to stick to the game plan. And if it comes a time where I need to make changes, then those changes will be made. But I won't really be making changes. Like it'll be on a month-to-month basis. So I would have to have like maybe 2 red months before I start to make any changes. If it's 1 red month or even a small red month, then I would still stick to what I'm doing. And then that's kind of how I base things off. Like even with my contract sizing, I only change my contract sizes by the week. So like for right now on my personal account, I'm trading 10 contracts on my personal, just my actual money. I'm trading 10 contracts, and then if we have a good week, then maybe I'll adjust it to 12. If we're having a slow week or a bad week, then I'll adjust it to 8. But for the most part, I don't make changes unless there's a consistent downward spiral from where I'm currently at. So yeah, I mean, if there's anything else that you guys want me to cover, feel free to let me know. Let's see, Brock said had asked something above about timing because we don't know how long. Let's see, Brock said, sorry, Brock, there's like a pop-up in front of your question. Let me close it. Okay, so Brock said, just wondering, noting the way the volatility has been unreliable in the past sessions, would it help to go back to the 3-minute and 10-minute analysis like before? It wouldn't really make a difference because the volatility is going to be the same no matter the time frame, Brock. So let me just show you, for example. Okay, so let's go over here real quick. And I'm just going to box out. So like today, the market was slow between 6:30 and 8, right? It wouldn't make a difference what time frame you're in because right here, this is the 1-minute time frame. It was slow. If you go to the 3-minute, it doesn't make a difference. It's still, it's even worse, right, Brock? So you can see it on 1 minute. There's like some movement. Let me go here real quick. Let me mark up the structure. Here, I'll just replay it to this right there. So I'll mark up structure right here. And I'll show you that it's pointless. It doesn't make a difference what time frame you're trading on. Because if the market's slow, the market's slow. It doesn't make a difference if you're on the 1 minute, 5-minute, 10-minute, 20-minute, 1 hour daily. It's not gonna make a difference. So this is the 1 minute here, right? You can see the range. If we go over here to the 3-minute, it's even worse. There's like, you literally would have no trades here on the 3-minute. If you go to the 10-minute, yeah, there's nothing you could take here, Brock, right? So it doesn't matter what time frame you go on, the market's still going to be slow. Just because you go on the higher time frame doesn't mean the market's going to speed up. It's still going to be super, super slow. So yeah, unfortunately, there's no way around it. The only thing that you can really do is trade outside of the live session time because you'll see that the volatility here is kind of slow between 6:30 and 8. I mean, if you want to trade outside the live session time, that's perfectly fine. But again, that goes against my trading rules. So I personally would not, because my rules are to just trade between 6:30 and 8. Of course, if you want to trade between 9 and 12, power hour towards the end of the session, that's your choice. But for me, I mean, I wouldn't, because if you just waited a little bit longer and you traded up like around 10 here, because whenever we get off the live session, I always mention don't trade between 8 and 9, but look around between like 9 and close or 10 and close. Because right here, you can see that there's more movement. So yeah, Brock, unfortunately, if you're still going to trade in the morning like I do, it's not going to make a difference what time frame you change to. It's going to be the same thing. It's going to be actually worse. But if you want to trade outside the live session time, I mean, feel free, but this doesn't fall within my trading plan. So for me personally, I wouldn't trade outside, but everybody's different. Some people want to trade later in the session. Some people have also mentioned it, as soon as we get off the live, the market picks up a little bit like it did here, but it only picked up here because there was news at 11. And that's why the volatility starts to pick up a little more. Let's see, Brian's asking, hey, Sean, on the whole number rejection strategy you explained earlier, you explained when price action moves back into the range, but if price action goes outside, yeah, it doesn't matter. It's the same thing, Brian. So if you have a confirmation of price going outside and continuing, it would still be 50-50. And if it pulls back into the range, it would be 50-50 as well. You're just using the whole number as a catalyst. Yeah, you're just using the whole number as a catalyst here. So when price breaks out of it, you're like, okay, what's going to happen here? Is price going to go up or is it going to go down? And it doesn't matter which direction. You take the sell there, 50-50. Or if you take the, so here's an example of the continuation. So see how price breaks below it right here and it continues lower? Same thing. You do 50-50. So this is an example of it not actually pulling back into the range, but actually continuing. Same with this one over here. This is the catalyst, price breaks below, pulls back, drops back again right there. Same thing, 50-50. So right here, catalyst, price breaks past it, retraces back into the range. You can take it up for 50-50 this way. So it doesn't matter. That's just the whole number I used. I mean, obviously there's different numbers you can use. I haven't really tested it enough to understand, but like understand if there's a different parameter that we can use. But basically the way that the strategy is where I'm predicting is that it's going to trade from whole number to whole number, right? So from like this number down to this number, from this number down to this number. Yeah, no problem. All right, guys. So I think that's it for the questions today. If you guys have any other questions, feel free to reach out. Otherwise, I think that's it for the day. We covered a lot of stuff. So if you guys want to review this, I'll post it the replay shortly. But if you guys have any other questions, always feel free to reach out. So, all right, guys, if you guys have any questions, reach out. Otherwise, I will see you guys back here tomorrow morning for the next live session.